absolutely excited to be with you on today. Glad to have you come on in. We're going to be talking about something very, very extremely important on today, and I want you to get the fullness of it. And so I'm excited to have this opportunity to share with you on today. Listen, this is going to be phenomenal. I see people coming in. I appreciate you coming in. As you come in today, in the chat or the comments, let me know where you are watching me from on today. We are going to get into it. Drop your city below right now. I'm going to certainly look at them as we look back over the play and the replay of this in a little bit, but I'm so excited to have you with me on today. Let me tell you something. Today, we're not talking about credit the way most people have been taught. Today, we're going to break something big open, and once you see it, you cannot unsee it. So let me start with a question. What number do you think your credit score needs to be before financial life begins to actually experience changes? 750? 800? Yeah, I expected people to think real high numbers because that's what the internet tells you. That is what the commercials suggest. 750 is the gold standard. 800 and above is the dream. But here is what the bank is not going to put in a commercial. There is a number well below 750 where everything shifts. And when I say everything, I mean every single solitary thing begins to shift at that number. Where the rates change, where the doors open, where their grip on your money begins to loosen. That number is 681. 681. And the truth of the matter is, banks are hoping you never figure that out, because the moment you do, their profit margin on you shrinks and yours grows. Today, I'm going to show you exactly what changes at 681. 5 tipping points, one after the other, with the real numbers, the real math, and the real path to get there. What I'd like for you to do is type chat. I'm saying in the chat, type 681. If you're ready to see what the banks don't want you to know, you can either comment 681 because I want you to see exactly what the banks don't want you to know. And this is important. So we're going to get into it because I believe this is going to help you tremendously. Why banks profit from your ignorance? Now, this is critical. Before we get into the 5 tipping points, I need you to understand something about how banks make money. Because when you understand their model, everything I'm about to tell you makes perfect sense. Banks do not make money when your credit is excellent. They make money in the middle, when your score is sitting at 620, 640, 660. That is their profit zone. That is where the 17% credit card APR lives. That is where the high premium insurance quote lives. And here is what is brilliant about their system. They never tell you exactly what changes and when it changes. They just say, improve your credit and leave the details vague, because vague keeps you paying. Think about that. Vague is profitable to them. Specific is profitable to you. So today we're going specific, because specific is what's going to change everything that you need changed. Now, here's the part most people miss when it comes to credit scoring. Credit tiers are not a sliding scale. And this is important. You got to understand this, because if you don't, you're going to lose, and you're going to lose big. They're not a sliding scale. Your rate does not go down 1 point every time your score goes up 1 point. You see, this is not how lenders price loans. Lenders use something called risk-based pricing. which means they put you in a bucket, and the bucket determines the rate. Subprime, near prime, prime, super prime. All of these primes are based on score, and they're going to put you in a bucket. And crossing from one bucket to the next is not a small step. It is a completely different financial universe. This is important that you get this, because if you get it, you're going to see why you need to be positioned a particular way. So if you're below 580, that's subprime. High risk in their eyes. 580 to 669, that's called near prime. You're still paying penalty rates. 670 to 739, they call that the prime area. This is where things begin to shift. And 740 and above, that's super prime. Those are the best rates, the best terms. And 681 is the entry point into the prime territory where rates begin to change. Let me help you understand this real clearly. Credit ultimately is about the interest rate you can be charged for what you're trying to get in a financial arena. So when you cross that 681 line, you are no longer in the penalty zone. You have changed your risk classification, not just your score, your classification. And that changes what lenders offer you, the rates they quote you, the cards they approve for you, the capital they make available to your business. Now, this is important. You've got to understand these things if you're going to be successful. Now, let's talk about exactly what unlocks when you hit this number, because it's big. 5 tipping points, real numbers, real money. And this is important, starting right now. So this is important. On the 5 tipping points, I want you to get this. Take time, jot it down if it's going to be beneficial to you for later on, or you're going to come back and watch this and watch it again and again, because trust me, you do not want to forget these 5 tipping points. Tipping point number 1, auto loan rates. Now, this is a critical one. And this one hits most people where they live, because most of us have a car payment. Here's what most people do not know about auto loans. The rate you receive is not calculated in real time based on your exact score. It is assigned by a tier. And when you cross into a new tier, you cross into a new rate category entirely. This is important for you to really understand this. So let me give you the real numbers. 580 to 619, you're looking at about 14 to 18%. 620 to 659, that's 11 to 14%. 660 to 680 is 9 to 11%. 681 to 719 is 7 to 9%. And 720 and above, you're looking at 6 to 7.5% or lower. Now watch what happens when you get these real money behind all of this numbers. So here's the money figures that go with some of these numbers. $28,000 car loan, very average, very real. At 13%, that's below 681. Your monthly payment is approximately $637. Total interest around $10,200. That's serious. The exact same loan at 8%, which is at the 681 number, your monthly payment drops to approximately $568. And your total interest around $6,100. That is a $4,100 difference that you keep in your pocket just because your scores are above 681. Same car, different positioning. And here's the move that most people miss completely. If you already have a car loan at a penalty rate, You don't need a new car to get that savings. You can refinance the moment your score hits 681. Not a new loan, not a new car, just using the system the way it was designed to be used by the people who understand this system. This is what we do inside the CBL Blueprint. We teach you to use the system, not survive it. And this is important. Now, I want you to get this today, because if you don't get this, you're going to make some huge, and when I say huge, I mean humongous mistakes. And we're not going to make those mistakes today. We are going to understand the opportunity that these tipping points are giving us. Let's keep moving. Let's get tipping point number 2. Credit card offers transform when you get this one. And this one changes your mailbox. Right now, if your score is below 681, the credit card offers you receive look like this. Secured cards. Cards with annual fees you pay just to have the card. Cards with APRs at 28% and above. Cards that are designed to keep you paying, not building. At 681, that changes. 0% introductory APR cards start appearing. 15 to 21 month balance transfer offers start showing up. Reward cards with actual value, cards that work for you instead of against you. And let me show you what that actually means in real money. Say you have $10,000 in a credit card debt right now at 22% interest. You are paying roughly $185 a month in interest alone. Not principal, not progress, just interest. Move that balance to a 0% card at 681, and the same $185 is now eliminating debt. Same dollar, different positioning. I'm no longer paying just the interest payment with my 185. Now my 185 is getting rid of the actual debt. This is what we call the same dollar strategy inside the blueprint. The money does not change. The position of that money changes, and that changes every single thing. And here is the discipline piece I have to give you. Because if you don't get this, you miss it all. A 0% transfer card is a tool. It is not a reason to spend more. It is a window, and that window eventually closes. Use it to eliminate the debt, not to reset your spending. I want you to type same dollar if this just changed how you think about the money you already have. Type same dollar or put it in the comments, because I want you to understand this. Someone's same dollar is paying interest only, and someone else's same dollar is paying down their debt. This is important that you get it. It's important that you live by the tipping point. Now, tipping point number 3, business credit access. This one here is critical because I want you to get this. This one is about mortgage brokers and everything that they will or will not tell you, because mortgage brokers are in the room with home buyers. I'm in the room with entrepreneurs and individuals seeking to elevate credit so that money can flow in their lives. And entrepreneurs, for instance, need to hear this critically. Your personal credit score is the key that unlocks business capital. I want you to say that out loud if you're home right now. My personal credit is my business character reference. I'm going to say it again. My personal credit is my business character reference. Think about what a character reference does. It tells someone you can trust this person. They handle their obligations. They follow through. Your personal credit score is sending that same message to every lender, every vendor, every partner you approach. And at 681, that message changes. Here's what specifically opens up for your business at 681. Most business credit cards become accessible. Chase Inc., American Express Business, Capital One Spark, These are not just cards. These are credit building tools that report to your business credit profile, separate from your personal. SBA loan approval rates improve significantly once you get above the 680 threshold. This is not an opinion. This is published data. Net 30 vendor accounts approve faster. Business lines of credit from credit unions and online lenders become available. This is where the CBL Wealth Blueprint connects credit to business. You cannot separate them. Your personal score and your business profile work together. One unlocks the other. Credit leads to capital. Capital leads to leverage. And leverage is how you build. If you are a business owner watching today and you've been treating your personal credit as a personal thing, separate from your business, this is the first misalignment we have to fix. This is important. If you're in this room, you have got to understand this, because if you don't, you are setting yourself up for direct failure. Tipping point number 4, insurance rates drop. This is a big one. I'm going to need you to lean in, because this one is critical, because most videos on credit scores completely skip this. Your credit score affects your car insurance premium. You may not know that. Not just your loan rate, your insurance. In most states, insurance companies use what is called a credit-based insurance score. It is different from your FICO score, but it is built from the same credit data, and it determines part of your rate. Drivers with good credit, which starts around 681, pay up to 23% less in auto insurance than drivers with fair credit. Let me put real money on that. On an $1,800 annual premium, that is over $400 a year back in your pocket. No change to your car, no change to your driving record, no change to your coverage. Same car, same driver, same record, just different positioning. This is $33 a month every single month just for crossing a credit threshold. Now add that to the car payments savings from tipping point 1. We are already talking about $100 or more a month you are giving away right now that you could stop giving. This is important. You've got to see this. You've got to see this. I want you to type insurance in this chat or in the comments if you have absolutely had no idea your credit score was affecting your insurance premiums. This is important. We've got to know that our credit scores are driving our insurance rates. Tipping point number 5, rental and housing approval. Now, this one is for my entrepreneurs thinking bigger, or for my individuals looking to expand. Those of you looking at investment properties, commercial spaces, or who are just tired of landlords questioning you every time you apply. Most property management companies set their approval threshold right around 680 or better. You walk in at 681 with a business income story, and you are in a completely different negotiation. Not a different building, a different conversation. And this is important. You have shifted from applicant to candidate. Can you see the difference? Applicant versus a candidate. And for those of you thinking about real estate as a wealth vehicle, which I hope all of you are, personal credit is often the bridge that gets you to your first or your next property. This is where credit connects to life in our blueprint. Having a roof over your head or owning that roof others live under, that is life alignment. That is what credit was always supposed to do for you. It provided you leverage to get someone's money to put more money in your pocket. Let me bring all 5 of these together for you. Auto loan rates, credit card offers, business credit access, insurance premiums, rental and housing approval. 5 completely different categories, 5 completely different financial wins. This is important. One number, one lock, and 681 is the key. This is important. One number, one lock, and 681 is the key. Which tipping point are you surprised by the most? Number 1, 2, 3, 4, 5. This is important because these tipping points are the change for the game for you, or they are the actual thing that is keeping you from what you would say you really want. This is important now. This is critical. Let me tell you about someone I worked with, a male entrepreneur, 54 years old, stuck at 647. He had been stuck near that number for years. He had a truck loan at 15.2%, $11,000 in credit card debt at 23% APR. He had applied for a business line of credit twice, declined both times. He was not a bad person. He was not irresponsible. He just did not have the right information. And because he did not have the information, the system was using that against him. We did 3 specific things. First, we got him authorized user positioning. We got him added to an account with low utilization and significant age. That account's history started reporting on his profile for several months. Second, we had a statement date strategy that we used. He started paying his credit card balance before the statement closed. This was critical for him. Before it closed, not before the due date, before the statement date. That changed what the Bureau saw when they looked at his balances. And third, one collection was addressed strategically, not ignored, not panicked over, handled with a specific approach. Those 3 moves, 81 days later, his score hit 682. 682. I want you to get that. And then the cascade started. He refinanced the truck. Rate dropped from 15.2% to 8.6%. Monthly payment dropped by $210. He qualified for a 21-month 0% balance transfer offer, moved the $11,000 in card debt, eliminated $211 a month in interest payments. 60 days later, he opened his first business credit line, $7,500. His insurance renewed at his next cycle. Premiums dropped approximately $380 for the year. Are you hearing me? Now let me do that math out loud for you. 210 on the truck, 211 on the credit cards, 31 a month on insurance. That is $452 a month he was giving to penalty rates every single month that he now gets to keep in his pockets. Same person, same income, same habits, but different positioning. And that is what made the difference for him. And it is what will make the difference for you. Would you like that type of story in your life? That type of transformation in your life? If you don't want to leave today just inspired, but you really want to move beyond inspiration, you want to get beyond just pure emotion, let me give you the actual moves. First move that gets you to 681 is important one. Know your credit score. Pull your score today. Soft inquiry only. That's what it does if you pull it. Does not affect your score. Credit Karma is good for this, or I use smart credit in my business for everyone. But get to know the score. Get an idea about where you are. Most banks and credit unions now show it for free. You cannot fix what you do not measure, so start right there. I mean, start right there. Move 2, check your utilization. Utilization is the percentage of your credit limit you are using. The standard you hear everywhere, 30%. Keep it below 30%. That's not what I teach because it doesn't work. Inside the CBL Wealth Blueprint, our standard is 10% or below on the statement date, not 30, 10%, because the scoring models reward lower utilization significantly. It is one of the fastest ways to raise your score, and dropping from 30 to 10 is often a 20 to 40 point improvement on your credit scores with no other change. If any single card you own is above 30% right now, that is your fastest lever. Begin to pay it down or call and request a limit increase. Either move improves that ratio. Now, move 3, authorized user positioning. I use it all the time as a strategy. This is one of the most legitimate and most underused tools in credit building because people told people it no longer works. If you have a trusted person in your life, a parent, a sibling, a spouse who has a credit card with low utilization and account history of 5.5 years or more, $10,000 limit, getting added as an authorized user on that account can bring that entire history onto your credit report. You don't even have to have access to the card. You just need to be on the account, and the Bureau sees that history as yours. This single move has pushed people across 681 threshold faster than anything I've seen before. This is critical. Move 4, the statement date strategy. This is the one most people mess up. Every month, your credit card has 2 important dates: the due date, when your payment is due, and the statement close date, when the billing cycle ends. Here is what the credit card companies want you to focus on: the due date. Because if you pay on the due date, your balance was already reported to the bureaus. And whatever it was when the statement closed, that is the balance they saw. Here's what I want you to focus on: the statement close date. Pay your balance down before the statement closes so that when the card reports to the bureaus, they see a low or a close to zero balance. This single adjustment has moved scores 20 to 40 points in a single reporting cycle. Same money, same habits, different timing makes all the difference. Move 5, address collections strategically. One collection on your report can be the entire reason your score is sitting below 681 now that we are in trended data. It means you've waited a long time to even address this, or maybe you've never addressed it. And the mistake most people make is either ignoring it or panicking and paying it the wrong way. Paying a collection without the right approach can actually make things worse before they get better. Know what's on your report. Understand your options and handle it strategically. If you want to know exactly how to handle collections the right way, that is something we go into deeply in the CBL Blueprint, or as we help people get their credit scores above 700. I'm going to tell you how you get this done, and you can get it done because you not only need to get it done, you must get it done if you want to see those interest rates coming down and you paying so much less in interest. Now, this is critical. And I want you to know I've been enjoying this today. Now, let me bring this all the way together for us, because everything I just walked you through, every single thing lives inside my CBL Wealth Blueprint, something that I teach: credit, business, life. Credit, this is what you're looked at and seen in the world. Business, how you make your money. Life, what's going on with me, my focus. Where am I at? What am I going after? This is important. 681 is not just a credit milestone. 681 is where the leverage phase begins. Let me show you how it flows. Credit comes first. When your credit is positioned correctly, you access better rates, better offers, better terms. Your cost of money goes down. Lower cost of money means more cash flow. More cash flow means more capital available to you and to your business. More capital in your life or in your business means you can start leveraging other people's money, other people's resources, building with leverage instead of just surviving with income. And life, the L in CBL, is what all this is ultimately for. Better housing, better options, more freedom, the ability to make choices that are not driven by desperation. Credit leads to capital. Capital leads to leverage. Leverage leads to living the life you want. That's the blueprint. And 681 is the door. What's your score? Because if you are not above 681, these tipping points are an issue that must be adjusted to, must be understood, must be consumed, and must be changes made so that now I qualify because I've learned I need at least 681. You don't have to be perfect. You do not need a 750 or an 800. You need the right score at the right time. And right now, the minimum is 681. 681. This is important today. And I hope you're getting this, because if you are, something's getting ready to happen great. Now, before I let you go today, I need to talk to those of you who are sitting at a score below 681 right now, and you know you need more than a video. You need a plan, a specific, customized, strategic plan built around your credit profile, your business, your goals. That's exactly what we do in my business. And if you look in the description for this video, you're going to find opportunities to connect around where you may be. If it's personal credit, get connected. If you're a business owner, get connected. We look at where you are. We map out where you need to be, and we give you the exact steps to get from here to there, or we do it for you to make sure you end up in the specific place you need. Not general advice, a specific plan. Listen, the link is there. Please check it out. Connect if you need it. But let me say this as well. I would love for you to like this video, subscribe to this great channel, hit that bell, because I promise you we're going to keep uploading great content just like this. And before I close, if this session gave you something you didn't have before you showed up today, please, please, please make sure you share it with someone else, because the algorithm rewards every like, every share more than people understand. You also are going to be helping other people get the information banks hope stay hidden. I'm so excited that I had this opportunity to share this with you on today, and I appreciate you taking the time to watch it all the way through and to get from it what you need to level up your life. You be blessed. Have an awesome rest of the day. Talk to you soon.